So in this video, I'm going to show you how you can use the BRIGHTMLS net sheet to quickly create net sheets for the client easily and effortlessly, much easier than hand calculating it. There are some things that you'll have to figure out ahead of time, so I'm going to go over those now. But the way that you get to the seller net sheet is it's under financial once you log into BRIGHTMLS, and then you're going to go to seller net sheet. You can also create buyer closing costs, amortization schedules, financial calculators, etc. But for today's session, we're going to do a seller net sheet. Once you're on this page, there's nothing here. Now mine has some information in here that I have put in here, and I'll show you how I did that so that automatically populates. So the first thing is you can figure out who you're going to be working with as far as a title company. And once you figure that out, they usually have an estimate that they can provide you. And if not, you can come to connect.qualia.com, and I've actually come in here and I've added the property. The next step is selecting a provider. And here you're going to notice there's Cardinal Group, there's MBH, different locations, and then there's Monarch, New World Title, etc. So you can select the different title companies to see even the settlement differences. So then you can add the seller fees, etc. So you want to go through this process to understand what the costs are that they charge for different things. Now going back to the BRIGHTMLS, once you figure that out, and I have a screenshot of the one that I did earlier, so let me show you. So here's one that I did, and this was for a specific property, and I can see what they charge for title fees and payoff items, etc. So you can see their basic fees. And the ones that I'm looking for, because this area is the taxes and recording fees gets calculated in the BRIGHTMLS, so I don't really have to worry about that. But I was specifically looking for the title fees. And you can actually go back and look at the different fees, etc., or just put estimates there as well. But I wanted to use this because I know I'm going to be using, let's say, Cardinal for this one, and I put that in there. All right. So instead of having to put it in each and every time, you can actually come to the top here and click on Preferences. And under Preferences, you can actually put all of your information in here. So for example, if you have a wood infestation certificate and it's usually $50, you can put that in here. Here's the settlement cost that I took from that sheet. So I'm going to enter that in here. If you have a broker fee, you can put that in here. Brokerage commission, so if you wanted to put 6% there, and you can change it. Attorney fees, home warranty, if you usually have or offer home warranty, you can put that in here. Deed preparation, this again is all the ones that I entered. And what you want to do is you want to save. So those are your preferences. So for Samson Properties, for example, we use Cardinal. So these are their fees. Then you can go back. Now we're going to go back and create a net seller sheet. So here I'm going to put in the address. And click enter so that it searches. This is very nice because it's going to auto-populate all your taxes, assessments, everything else. Now, if it finds multiple ones, you're going to have to go through and find the one that you're looking for. So click on the correct property. This is a condo, so it's going to give us multiple ones. Then you come in here and you're going to pick a settlement date. So the settlement date, so think about when you're listing it, and then when the settlement is going to be. So 30 to 45 days may be the regular thing that you're putting in here. So if you're putting a property on the market August 1st, and you know that it may take 2 months to sell and another month to go under contract. So you can put that in here and understand what you need to do. So if the settlement date, so let's say this property we're going to put on the market August 1st. We know that it's going to be on the market for a minimum. So August to September 1st, let's just say that it's a hot market and we've sold it. So August 1st, we have a contract, and the settlement date is September 1st, or let's just put September 1st. Or you can put September 15th if you wanted. I could show you the difference between that. So I'm just going to pick that, and this is just an arbitrary number. But if you're going to be doing multiple net sheets, I think what you would want to do is make sure you use the same settlement date so that they have information in here. So let's say that we're going to do this one for $500,000. Okay, and then if they have a first mortgage balance, so this is something that you'll need to get from your clients. If they have a second mortgage or a third mortgage or something like that, you would put that in here. Now, after you get a contract, if there is a seller's assistance or some kind of negotiations, some kind of subsidy, so in the case, there's repairs or HOA violations, etc., or something that the seller is going to give back, you can put that in here. So this is what the seller is going to assist with. So if they're going to assist with 1% of closing costs, or if they're going to give $2,000 paint allowance or something like that, this is where it would go. So we have the brokerage commission, so that would go there. I'm just going to change that to that. Assessments, all of this information gets pulled from the records. And the nice thing about this is it already automatically calculates the capital fee. All right, so you will see all of this information is pulled in, and you can see how it calculates depending on when the county taxes are paid, if there's a HOA fee or a condo fee. So you can put, for example, $490, and if the client has paid from the first to the end. So if the client has paid $490 for the month of September as part of their payment process, you can see that this part is going to come back to the sellers, right? Because we're settling in the middle of the month, so they're only going to pay for 15 days. So I wanted to put in specifically for the 15th so that you can see that there is going to be some credit if the client has paid either the condo fee or HOA fee, etc., for a month. And then, of course, if there's any other fees for your specific type of property, you can put that in here. Now, the county tax and municipality tax, these are automatically all calculated for you, so you don't have to worry about it. So here, once you've completed all your information, you can see what they're going to receive. So you can see here for the sales price, mortgage payoff, charges to the seller, which is everything that's calculated here, and credits to the seller. So this credits to the seller is obviously some of the county taxes if they were paid July 29th. And if they weren't, then they wouldn't be credits there. And then, of course, the condo co-op fee. All right, so you can see that. So then you can go ahead and save this, or email it to your client, or go ahead and print it. So it's up to you how you want to do it. Then you would come back here and change the price from 500 to, whatever it is that you want to show them the different prices on. And that's how you calculate or use the estimated net sheet.